but you swiped your card for something else that's not included on your list. That's why it's very important to kind of narrow everything down with a fine tooth comb on what needs to go where. I feel like you should have certain accounts for different bills. You should have certain accounts for savings that actually accumulates money on top of it, which is compounding interest. So you should have different accounts that help simplify your life correctly.
Welcome to the My Future Business Show, where we get you in front of your best audience and keep you there. Not only are we interviewing the biggest names in business to help you become even more successful, we're inviting you to book your spot on the show to help you grow your business. So at the end of the call, make sure you fill in the interview application form at myfuturebusiness.com/interviews. Hi and welcome back to the My Future Business Show. As you know, my name is Rick Nusky. I'm the host, and no matter where you are in this wonderful world of ours, I hope you're doing really well. Today I'm on the line with Troy, Rich and Rashida Fleming. How are you guys?
Hi, how are you?
Pretty good, pretty good.
Like I was just saying, I have 2 feet and a heartbeat. I can't complain now. Troy and Rashida are from the Little Man Investing Group, TLMIG, and we're going to be talking about financial literacy and the importance of that. And I'm going to do most of the listening on this one because this is a topic that requires some special knowledge, and that's why I have both Troy and Rashida on the line with me today. So welcome again to the show, guys.
Thank you. Thank you so much.
Yeah, thank you.
Now, it's one of those things that because this is unusual for the My Future Business Show to have 2 wonderful guests on at the same time, but it's probably going to be a format we take up more often. I think what we should do first is introduce you individually. So, Rashida, if you wouldn't mind sharing a little bit about yourself with the group.
Yes, my name is Rashida Fleming. I go by She, and
She.
I actually have been in real estate for over 13 years.
Mm-hmm.
I started off in tax liens doing wholesaling, fix and flip, subject tos. Oh gosh, you name it, I pretty much done it. And now we have been building homes from ground up. I have also have closed over 60 short sales within 60 days.
Mm-hmm.
And I also help people who have went through a foreclosure, and I taught them financial literacy and how to actually get themselves back on track.
That's wonderful.
So, yep. So that's me in a nutshell.
Excellent. So, Troy, how about yourself?
My name is Troy Rich, and I started off in the architectural and design world and kind of ventured over into real estate, and I primarily focus on, probate, pre-foreclosures, as well as short sales. Similar to what Rashida has already mentioned, and just to kind of let you guys know, we've kind of accumulated a couple of $1 million worth of assets within a short period of time. So we're very familiar with, very knowledgeable with real estate and how to invest properly to maximize your gains.
Yeah, it's one thing to talk the talk, but it's another thing to walk it, isn't it? And actually be out there doing
That's right.
So
That's right.
And this is why this is so important for anybody who's on the call today to listen in, because we're just about to have a great lesson on understanding finance and why it's so important. And actually, we're going to go into a number of different areas. So where do you think we should start? Where are the fundamentals that people should be starting at if they're just coming into this space?
So I really feel like they should start off with their personal analysis. So personal analysis is basically starting off with your assets and your liabilities of what you previously have in your account and what you do on an everyday base. You want to kind of figure out what your NCF is, which is your net cash flow. So your net cash flow is based on the money that you come in, the money that you bring in from a 9 to 5, and then the money that you, and deduct that from the money that you spend on an everyday base. Whatever the total amount is, that would then tell you whether you're in a negative or a positive. So that is the best way to start to figure out if you're ready to invest, or if you need to save more, or if you need to kind of figure out where your needs and wants are, things that you can start marking off your list. That way, I'm spending too much money going out to eat, or I'm spending too much money shopping. You need to kind of narrow it down so you can figure out what your actual roadmap is.
Yeah, it's funny, isn't it? Because if I use myself as an example, there was a time in my life where I was a lot younger, and I would often, my expenditures would far exceed my income, and then I was in this credit world, and I got caught in this really vicious trap of not being able to dig my way out. What would you say to people about the whole credit card approach? What is one of the useful things that we can share?
Oh gosh, when it comes to credit cards, it can be a benefit, but then it can also be an epic fail
Hmm.
depending on how you're using your credit card, right? Credit cards can actually be one of those tools because I'm going to give yourself a prime example of me. I have definitely used my credit cards to pay all my bills before.
Hmm.
And that became a great ideal for me because when money started flowing in, all I had to do was just pay back that one credit card.
Yeah.
So I literally took that credit card. I paid every single bill that I could. I did the automatic withdrawal out automatically from that card, and then I was able to pay it back on a monthly base, which actually helped me out. But what happens is, let's say for instance, you have a down spiral fall or something happened to where you didn't have a cushion,
Hmm.
and an emergency came up. Now you're going to have that upside down situation going on with your credit card that you still have to owe, other bills that's constantly coming up, but you swiped your card for something else that's not included on your list. That's why it's very important to kind of narrow everything down with a fine tooth comb on what needs to go where. I feel like you should have certain accounts for different bills. You should have certain accounts for savings that actually accumulates money on top of it, which is compounding interest.
Hmm.
And I also feel that you should have certain money for your spending habits. So you should have different accounts that help suitify your life correctly.
Yes, and you touched on compound interest, and that's something we learn at school, isn't it? And yet we tend to forget all about it.
Correct, correct. Yeah, I mean, just like with the bank account, it's sad, but most of the larger banks don't really offer compounding interest, and it's all for a reason. But if you really do your due diligence and find out what local banks offer compound interest, it's best to utilize those banks to store your funds or to manage your finances through. And kind of to recap on what Rashida had mentioned previously,
Hmm.
credit cards can be beneficial or it can hinder a person. So it's really based on how an individual uses or utilizes that credit. You can utilize the credit if you have a credit card that has low interest rate and you're paying high interest on something.
Yeah.
Whether it's a mortgage or personal loan or whatever the case may be, you could utilize that low interest credit card to pay off that higher interest, and then you can kind of minimize and set your payments up to pay off that credit card because credit plays a role as well. You want to keep as much capital available as possible when it comes to utilizing credit cards, just so that you're not exceeding your debt to income ratio when it comes to your credit cards. So
Yes.
it all kind of play hand in hand, but it helps you in the long run as far as utilization as well as your overall available capital, which is very important when it comes to investing.
Mm.
So that's some of the things you want to keep in mind and remember.
Yeah, thank you for sharing that. That's wonderful insight from both of you. And I'm sitting here thinking to myself, marketing. And the reason I say marketing is that it's so easy to get caught in this trap where advertising is such that, get this card now and worry about it tomorrow. And, this sort of conversation is not something that I had when I first started out. And this is why, I guess, part of the reason why it's so important to become financially educated. What are some of the
Right.
other dimensions that somebody new and looking at this should come in with? What should they be listening for?
This is the one key. This is the issue that we really have in today's time. This is why we actually set up financial leadership center. And
Hmm.
the reason why we actually set that up because we do have a platform for investing, but we like people to get educated first so they know exactly where they're putting their money so they can understand exactly how their money needs to flow so they can understand their own roadmaps and whatever it is that they're trying to reach, whatever goal that they're trying to reach for their generational as well too. Because what happens is as we're constantly trying to feed ourselves all this information and you're constantly going to all these different seminars, no one is really giving them the nips and bolts of how to actually do it.
Yeah.
So it's like I'm coming into a seminar, I'm paying my money,
Yeah.
but once I'm paying that, I'm paying to learn what fix and flips or something or wholesaling. Once I learn about fix and flips and wholesaling, then what? How do I spend the money that I actually make off of that? Then what happens after that, which is why we decided to come up with an educational program that allows people to help them funnel where that money should go. They actually have a written down roadmap of where should I place my money personally for each individual, because everyone is different.
It comes across to me as like a bit of a journey in terms of your education.
It is.
You're starting off at the bottom of a mountain, to use somewhat of a metaphor, and to get to the pinnacle, the peak of investment, of investing options. You need to go through that path, and it could be quite a lengthy journey.
Yes, very. It can be if you actually attach yourself with the right people.
Right.
And if you actually know exactly where you're trying to go. You have to figure out what your end goals are. In order for you to figure out your end goals, you just have to outline everything that you're trying to exceed in life. And once you have that and you start taking the right courses to help you along the way, you can probably get there 10 times faster than someone constantly going to all these different places and trying to find themselves without even knowing what their end goal is.
Yeah, yeah. I
Right.
for many years, Troy, I've actually had a
Hmm.
relationship with a financial advisor, and they know a mortgage broker. So there's this network of, I guess, a net effect, and having that relationship is just so much easier than trying to do this on your own.
Correct, correct. Yeah, I mean, we have established relationships with brokers, with advisors, and what kind of sets us apart is, like Rashida has said, we start from A and walk you through Z.
Hmm.
So in the very beginning stages, we would like to educate first so that you can understand and have a grasp concept or thorough understanding as far as how finances work. From then you're now considered a member of a large platform that is well connected with some of the elite individuals in the industry. So not only you have collaboration and the ability to connect with other people that can assist you along the way, but through our programs and teachings, we also give out money to assist people by using the money that we give them. So not sometimes we can go to different places and hear different, opinions in regards to different approaches. But very rarely do you go somewhere where we're willing to give you the funds because we're so confident in what we're saying, just so that you can see the positive results and then hopefully use those results to spread, kind of the movement that we're implementing in today's society. So it's
Right.
it's not only you're learning, but you're having the ability to not necessarily invest your money, but using the funds that we give you to invest, and then also by having another platform that allows you to invest within it, which is TLMIG, to receive producing assets up to 15%, which is something nobody else is doing.
Yeah, it takes a very robust system and some great people behind it to be able to put forward such an offer and be confident, because we're talking about money here changing
Yep.
hands, and
Right,
it's not
right.
something to take lightly. It makes the world spin round, as they say. I wonder, um, given that there are so many different types of investing options, are you dealing with the whole library of different options? And where do you think that somebody should be starting in terms of their first investments?
I feel like they should start off with Ground. We have something that's called Ground. Ground is like your savings
Mm-hmm.
account,
Mm-hmm.
right? So Ground can earn you anywhere between, let's say, 5 to 15%. And same thing with Growth. But the thing is with Ground is that it's a platform that is locked in for 5 years. You have the ability to diversify your income. And if it's not diversified, and if you want to do compound interest, you can actually receive those dividends on a quarterly basis, and
Mm-hmm.
it'll be direct deposit into your account. So you can use those funds as any way you can. But if not, and if you want to roll those funds back in, then you can go ahead and roll those funds back into your account, which allows you to compound it on a monthly basis on that. So growth would be the first place I would say to start off. The minimum is only $300. So by you investing into something that's so small, and you also have a 90-day money guaranteed
Yep.
to come back to you if you don't even like it. If it doesn't work within 90 days, we'll actually fund you back your initial investment.
Okay, so during the application process, which I presume there is one, somebody
Yes.
comes to you and they say, "This is my position right now." What is the actual process that you will take them through?
So we are being regulated through the SEC.
Hmm.
So we are Regulation A, and they do have a step process. So everything is online based. We're in that kind of like fintech industry. So what happens is you go online, you fill out your application, all the documents, all the contracts, and everything is online. Once you're inside that platform, excuse me, it'll show you the different portfolios that we have. It'll show you apartment complexes, rental properties, and things of that nature that your money can actually be diversified into.
Do you find that the the portfolio options change based on the current day economics of the nation, and how do you monitor that subtle variation over time?
So each portfolio is specifically structured based off of an end goal.
Yeah.
Because we understand that each individual have a specific goal set in mind when it comes to investing. Some people want to invest short term. Some people want to invest more so long term, more so for retirement in comparison to somebody who's trying to build residual income, or somebody who's just trying to build some passive income or
Hmm.
generational wealth for their children or grandchildren or different family members. So it's really based on the individual. So that's how we came up with different platforms to offer anybody who's looking to invest, because we like to structure our investment model around different individuals' needs to ensure that we meet everybody's needs as well as expectations. You may have the reason why each platform is diversified is to leverage, let's say, the worst case scenario occurs. Well, by you having a diversified portfolio or platform, it leverages the money that's being accumulated or received. So you're not having to worry more so about having all of your eggs in one bucket and that bucket goes bad.
Yeah.
You're diversifying your eggs in multiple buckets. So if one bucket is bad, you're still receiving the benefits of the other 9 or 10 buckets. So that's why it's important to diversify your investment.
Yeah, I love that idea. Risk diversification, risk minimization, and a higher upside is always
Yeah.
is always a
Right,
positive
right.
thing, isn't it?
Yes, it is.
Uh,
Yes, sir. Yes, sir.
I'm looking at your wonderful website, and I'm mesmerized by the the video background there. I'm looking at the What We Do section, and you've got Teach Wealth, Track Wealth, and Grow Wealth. I'd love to dig a little bit deeper into how you track wealth. What's that process about?
The way you're able to track wealth is once you become a member and you actually make your initial investment. It's similar to signing up with a broker account through investing something similar to stocks. So you're able to see how your stocks are doing from a day-to-day basis. Well, the way we structure this is to have the ability or the convenience of checking your investment, your real estate investment platform through the palm of your hand for your convenience. So instead of you waiting for a paper document or something by email, you're able to track your wealth from a month-to-month basis through your phone or a tablet or whatever Android or Apple device that you use, on a day-to-day basis. So the way that we disperse our funds is you're able to receive your dividends, your earnings on a month-to-month basis, which is a lot different than a lot of people because a lot of people either do it quarterly or yearly or once the term matures. But we give you your earnings or your dividends on a month-to-month basis, and then you can make a decision on, hey, instead of giving me those dividends, why don't you roll that back into my initial investment in order to maximize my return? So it's really based on the individual, but that's one of the benefits that sets us apart from a lot of others.
So, how was it that you came together and formed this wonderful group of yours? Was it just a chance meeting? How did it all happen? I'd love to know a little bit about the genesis.
So I was
Well,
actually,
well,
oh, go ahead.
Troy.
well, just to keep it, straight, short, without taking too much time. The way it started is Rashida was actually doing some short sales. She was also doing some construction of some
Custom
new
bill.
construction for a
Mm-hmm.
subdivision,
Right.
and the what I was doing prior was, I do architecture, and I'm one of the few that's able to do a large volume of architecture with some of the top 100 Fortune companies such as Marriott Hotels. We do all of their designs when it comes to the Fairfield specifically, as well as Burger King's in the South
And
region, as
Arby's.
well as Taco Bueno and
Mm-hmm.
Popeyes and other various restaurants and retailers.
The big
And
players.
then Rashida, she works with a lot of the top builders, or she was being contracted directly as a contractor to do a lot of work with some of these top builders just because how she's well connected and so forth. So a mutual friend introduced us just because they thought it'd be good for us to do, my firm to handle all of the design concepts for the organization and company she was representing at the time.
Mm-hmm.
And then from there, we kind of collaborated and used our skills to work together. And during the Harvey situation, which occurred in Houston, we were able to, pick up a tremendous amount of property, not only in Houston, Texas, but we picked up a lot of stuff in Florida as well, as well as Oklahoma. So we were able to leverage all of those properties by doing what we needed to do in regards to fix and flips or buying holds or whatever the case was based on each individual property. And then we maximized our asset net worth and so forth. So that's kind of how we I guess
Started.
joint ventures and
Mm-hmm.
met and got started.
It's a hand in glove relationship, isn't it?
It
A match,
is.
Yes, sir.
a match made in heaven, as they would say.
Yes.
Oh, it's a wonderful thing you're doing, and I get very excited about this topic because I know that so many people, even if you're starting off with $1, you can do something with that dollar, and you can do amazing things if you just know the right path. Now, part of this path I've noticed here, the Paid to Learn Bootcamp. Can we just talk a little bit about that?
Yes, so the pay to learn boot camp is basically when an individual comes to one of the boot camps, they are able to allow themselves to go actually just go into our platform because they become a free member for a lifetime.
Mm-hmm.
It's just that one-time fee that they will have to pay for that boot camp. But what happens is you can, as long as you do the 4 steps that we ask people to do, they will be entered into the $25 million giveaway. And that's when we start paying
No,
out.
it's $250,000 giveaway.
Right,
So
right.
Oh,
it's a
sorry.
$250,000
The quarter of a
giveaway.
million.
Oh, either or, neither is a little bit of money, is it?
Right.
Right.
Oh, that's it's a wonderful thing, and you obviously are at this. I guess you're not at inception. You're certainly well established. You're looking for a few more things to fall into place in terms of regulatory requirements, which is just a standard part of the process. So,
Right.
where do people go when they want to work with you? Where will they find you?
So they can go to our social media platforms, which is Financial Leadership Center, or they can go to our Facebook, which is also Financial Leadership Center, or tlmig.com, and just click on Contact Us.
Okay, no worries at all. So everybody who's on the call with us today, I'm going to make available all of the links as we've just mentioned back to the group. And thank you so much for being on the show with us today,
Thank you.
Troy,
Yeah,
Rashida.
thank you.
It's been a wonderful opportunity, and I'd love to have you back again sometime.
Absolutely. Thank you so
Okay,
much.
sounds good.
Thanks for joining us today. If you enjoyed the call, then make sure to subscribe, leave a comment, share us with your friends, and book your spot on the show at myfuturebusiness.com/interviews. And if you're looking for solutions that will help grow your business, then visit myfuturebusiness.com/shop.